Hi everyone, my name is Mary Redmond and I'm talking right now about the Euro-US dollar pair. So I think last week we saw a definitive trend change. This pair has been in an upward trend really since the beginning of 2011. And what we did see is a very clear definitive break out of its upward trending channel. You had a bearish engulfing red candlestick going downward on the weekly chart. And on the daily chart, you can see that this is a very clear break out of its upward trending channel. It's not one of these little false breaks that just bumps along the bottom. And there were a number of reasons this happened. Probably the most important would be the market's interpretation of the press conference and the statement by President Trichet following the ECB meeting on May 5th. Because you can see, if you actually look at the days, you could see this big move down after Mr. Trichet spoke. And I interpreted the policy as being somewhat neutral. I mean, it wasn't really particularly hawkish as the market may have expected. They did say that they're going to monitor price stability, risks and price stability very closely, but they didn't say that they were going to maintain strong vigilance to inflation. And they also said that they do recognize that economic uncertainty remains elevated. So, as I interpret this, that means that they're going to continue to watch the situation and then do what's best at the next meeting. It doesn't really indicate what they're going to do 3 to 6 months down the line. But of course, the other thing that happened this week was we had the big rumor on Friday that Greece was going to leave the EU or leave the Eurozone or stop using the euros. And there was another big dive after that news came out on Friday. But, you know, there's always going to be rumors like this in the market. I mean, it's just part of the risk of trading. And ordinarily, I think probably most people would have ignored this because it's just very unlikely, based on the statements from the central bankers around the world and what would happen if you really think the situation through. It's very unlikely that any of these countries is going to leave the EU, although theoretically it's possible. But so most people might have, you know, if that had happened early in the year, that might have been just brushed off as a non-event. But the fact that the market is selling on bad news means that the trend has changed, and they're starting to pay attention, of course, to, you know, the problems in the EU, which they're not insurmountable. I mean, these countries do have the European Financial Stability Fund, which is kind of the beginning a little bit of what's a type of a federal system, whereby each state contributes and then the countries can borrow from it if necessary at an interest rate that's set by the ECB. So, you know, Greece and Portugal and Ireland are getting the money that they need, but nonetheless, it's still you're still going to see some losses. And I think the main problem is that Greece right now has over 300 billion in debt outstanding, and they need to repay approximately 30 billion this year and 20 billion the next year in 2012. Well, if they can't repay it at all, or if they can't repay it at the interest rate and they can't pay back the principal, then the bank is going to, various banks, I mean, they owe all the money to the banks in the EU, the various banks are going to be taking losses on this. And so what they want to do is have some type of a smooth transition. They probably have recognized that they're going to be taking some losses, but they want to structure any type of new transaction in a way that doesn't completely disrupt the financial markets and the credit spreads and cause some other type of a crisis like we had when Lehman Brothers collapsed in 2008. So when you look at what could happen if Greece actually went back to using their old currency, the drachmas, it could cause a true cataclysm in the financial markets, and the losses at the banks would be even bigger than they would be if they paid back their debts in euros, because if they say that they're going to pay back in the drachma and that's only worth 1/10 of the euro, then the banks are going to take even bigger losses. So the point is, the ECB is starting to be a little bit more dovish about rates, and then you've also got the anticipation of the end of the quantitative easing by the Fed. And the dollar index did make a significant breakout last week above its downward trending channel. So you can see it's too early to say that it's in an uptrend, but it is a break. And this is important because what you can see is that most likely institutions are now looking to the anticipation of the end of quantitative easing, which has flooded the market with liquidity and helped to boost the stock market and helped to weaken the dollar. So we need to watch towards the end of this week. On May 12th, the Federal Reserve should be publishing its statement of the anticipated purchases of treasuries for the coming month. So we'll see if there's going to be an additional round of quantitative easing through June 12th, or whether or not they're going to finish up in May, because at that point they will have completed the $600 billion. So that's one thing that you need to pay attention to. And you can see on the charts of the euro, it did make a bearish cross here on the twins. It did make a bearish cross here. On the weekly, you can see that it broke below its an important Fibonacci level of 43.5. Well, I think it's going to head down to its next one at 38.4. It's not going to happen right away, but I think over the coming weeks. But of course, you never want to chase a move down. I mean, there's always, there's always a pullback of some type. So what I would look at, I did with a small short already at 45.5. 44.5. I'm going to look to probably short again if it does move up to 44 or 45. And what the market may do is just consolidate for the next few days after this big move down. If it consolidates, that's further confirmation of the trend change. Because if this were just a blip in an upward trend, then it will go right back up again within the next few days, most likely. So if the euro consolidates and it doesn't move upward over the next week, you would probably be in a good position to start planning for another downward trend trade. And there are always economic reports that you want to watch for. This week we have economic reports on Friday. You'll have German and French and Eurozone GDP put together, as well as the US dollar CPI. And then on Tuesday there's a whole slew of big economic reports coming out from China in the evening. And it's not really clear exactly what impact that'll have on the market, except that if the GDP growth in China is much lower than expected, or the economic reports indicating growth are lower than expected, then you might have a sell-off in the stock market, because the stock market has really rallied in part because there's incredible growth in these so-called emerging nations. So we'll have to keep an eye on those reports, and in the meantime, I'm personally convinced that this is a trend change, so I'm going to look for further opportunities to short.